Let's go ahead and get started. I'm Rochelle Wilhite, the designated broker of Best Choice Realty. And today we've got Jenny Flora. She's with Zoom. She's Zoom Casa. It's powered by this program that Caliber offers is powered by, and we have the representative from the program Zoom Casa on the call, as well as one of my favorite lenders, good friend as well, Linda Kay. So she is going to be just kind of talking about the program with me. I think you guys will take a lot from it. We know that a lot, when we were talking about it like only a week or two ago, we actually had like a happy hour talking about different types of opportunities and different things for the buyers and investors. And what came from that was this cash buyer program, this forward program that she's going to talk about with me, how valuable this program really is for all of you. And as we're starting to kind of transition our business and how that will help your sellers and your buyers. So I'm going to turn it right over to Linda Kay. She's got some things on the screen, but we may or may not go through all of the slides. We are recording. If you have questions, I know we have about 30 people on the call, but if you wanted to send it in the chat like we've done before, that would be awesome. And we'll make sure we get to everybody's questions. So with that, I'll turn it right over to Linda Kay. I'm happy to see you again. We're Purple Day today. We did not plan that.
Well, thank you everyone for taking time to be on this. I know you do this every Monday, but it's great to see such a good showing here tonight. I'm excited to share this program. Like Rochelle said, we had a happy hour. It's called Buyer Hacks Happy Hour. And it was just talking about different opportunities that are starting to come back into this market. And things that we haven't talked about. Rochelle and I talked about 2-1 buy downs and lock and shops. I mean, these are terms from a long time ago. But then we also brought up a program called Zoom Forward. And Zoom Forward is not a program that has been available before. This is new. It kind of is designed for this market that we're in, which is a unique market where we have a lot of people that own real estate that have a ton of equity, right? So, I mean, the wealth that's in the equity, it's really fun when you talk to some buyers and you look at it, it's like if you sold your house, you would have this much money. And that sum of money to them is something that they never anticipated having, right? So it opens the doors to all kinds of things. It's like restructuring their whole world, paying off, selling their house, paying off their debt and buying the house of their dreams and being able to do all of that, something that they never even considered an option. So I don't know about you, but I know that I've talked with a lot of agents that have potential sellers. What's the biggest obstacle, or the fear of calling, overcoming objections?
The biggest obstacle, Linda Kay, is I don't know where I'm going to go. I don't know if I'm going to get bid out, and then I'm going to be homeless. That's what I hear. Even my sister said that.
Okay. All right. So, and what is the option? They come up with what? You can rent back. So right. Sell your house and rent back. And then that gives you 60 days, best case, right? Close in 30, right. Rent back for 30. You still have 60 days to find your next house. I mean, to me, that's still pressure, right? So I think that is the biggest challenge. And then also there's different things that come up with people that they just don't want people going through their house or trying to sell their house before and still live in it, right? And do all the things you have to do to show it. So this program is what I think can stop call reluctance. We're all in sales. I mean, it's sales, but sales is having answers to what's keeping people from moving forward, or it's at least options. And I don't think that we've had an option like this. If someone wanted to buy a house before they sold their house, Rochelle, what are their options? Home equity line of credit.
Right. Which is what I did a few years ago before this program. I mean, that's what I ended up as I don't want to be a contingent, right? So then I would do a HELOC, and then it's right. Okay. And it's uneasy. Even that is uneasy to do in a HELOC, and knowing if your funds are going to come in time to be able to apply for the down payment, just too much going on. So,
well, and from our point of view, you're qualifying for your current house, your home equity line of credit, and your new house.
Yeah.
I mean, that's tough. So not very many people qualify to do that, but right. it it's a lot to juggle, and maybe it's a short period of time. So that was one. The redback was one that got squished by a lot of brokers. Don't think that's a very good idea as a strategy. So let's go to the next. Can I do this?
Yeah,
So,
go ahead. Shannon's just going to help you out. My Vanna White.
Like Rochelle,
go ahead.
that's good. Like Rochelle said, we do have Jenny on the phone with us with Zoom Casa. So this program is powered by Zoom Casa through Caliber. One of the things when I was talking to Jenny before is a buyer off the street can't call Zoom Casa and say, I want to do this, right? This is a relationship. So Zoom Casa is part of the team. So if, let's say you've got a potential seller that says, I want to sell my house, but I'm not going to do it in this market because I have nowhere to go. I'm just not going to play that game. This is for that buyer. So Forward allows the seller to sell their house, buy a new house and make it non-contingent. Buy before they sell. No more contingent offers. No showings and living through the home prep. Right, that's what we're talking about. If you've got kids and things going on and you try to have your house show ready every time for people to come through and view it, that's just a challenge. And then qualifying for the traditional financing. Forward takes out their existing debt, pays off their existing mortgage, so their DTI isn't a factor for buying their new house. Let's go to the next one.
So
we'll talk about how we do this.
This would be good for like move up buyer, like people that are in their house, like maybe they've never sold before. You can see probably a lot of those types of clients coming through this program. Is that,
Yep.
You really have to understand the program or have a good contact. Who else is doing these programs? Is it just?
I think we're the only lender that has this. So there's a lot of cash. Like if you've got a 20% down conventional buyer, we can make them an all cash buyer, right?
Sure.
That program is out there. But I don't think that that Zoom Forward is anywhere. Not that I'm familiar with. I haven't heard it in our market.
Right.
So the scenario that I had, we have a couple, they have 4 kids and they have a beautiful home and it's a very full home. They have an autistic child and a child that's graduating from high school in June, and they want to move into a new house by the end of June. But they don't want to put their house on the market in the middle of graduation and with their child. So this program was their answer. They're like, let's go. So they're now out looking, right? So it unlocks up to 80% of the property's market value.
Awesome.
So listing agent, potential listing agent, lender, and the seller get on the phone with Zoom Casa. It would be directly with Jenny and walk through their scenario. So your role as a listing agent is, what do you think this house would sell for? Right? That's the piece of information that we need to start with, because Zoom Casa will buy the house for 80% of the property's market value. So they order an appraisal on the property, up to 80% cashes out their equity, pays off the existing mortgage. They remain in the property and move at their own pace. So they get approved for their Zoom Casa. They don't close on that. They've got 6 months to find a house. So in that 6-month period, they go buy a house, non-contingent. Then Zoom Casa, when they find the house, will close and buy their house and pay off the mortgage and up to 80%. So they've got their cash. We've not been in a market, Rochelle, where people that bought a house 2 years ago had enough equity to unlock that much, right? If 80% wouldn't be enough. But it is in a lot of cases now.
Yeah.
And this piece, Jenny, do you have anything you want to contribute so far that I've covered?
Sure. I mean, you're doing absolutely fantastic. I want to add that part first. Thank you guys for having me. It's just like Linda said, this is fantastic for some people that you have that maybe are cold leads currently. Somebody that you've spoken to that, like they mentioned earlier, was worried about their home selling out from under them and maybe got cold feet about transacting in today's market. This is a really great way to pick up the phone, reenact with that cold lead and say, hey, we just found this really fantastic opportunity that may solve the exact issue that you had. So what's beautiful about this program is that it's entirely customizable per client. So they can unlock up to 80%. But in most of my cases, most of my clients don't even need that much. Essentially, what we want to do is just clear out their debt to income so that they are more attractive for the lender, and Linda can qualify them for a better program and maybe less money down, and then pay off their existing mortgage so that they don't have to carry two mortgages at the same time. What's really nice is that the client doesn't actually sell their property to us in the beginning. We do an interview with them. Essentially, we go through all of the paperwork, or all the property information, like Linda stated, and then we order an appraisal. That appraisal, like Linda stated, is good for 180 days. So that gives your client the peace of mind of knowing they have a guaranteed buyer, which is Zoom Casa, on their property. They can now go write non-contingent offers. We provide them with a residential purchase agreement. We can provide the selling agent on their potential new property with any type of proof of funds or anything along those lines they may need to show that we can pay for this home in cash. And what's beautiful is if during that 180 days, your client decides, you know what, I just can't find the house I like, or I love my house too much, I'm not going to find something as cool as it or as nice as it or that fits my family best. There's no cost to them to drop the program other than the cost of the appraisal. And we work with a nationwide company that gives us discounted appraisal rates. So it's $399. So for $399, your client can go out and put in non-contingent offers without risking an earnest money deposit. I do see there was a question that was asked in the chat.
Say that, I didn't understand that. Just say that
Yeah,
again.
go ahead.
Without listing an earnest money deposit, what did you say there?
Without losing an earnest money deposit. So if they put down an offer and they couldn't close on the mortgage in time, they wouldn't have to risk losing that earnest money deposit, which is really what I'm seeing in the market happen very, very often.
Yeah. It's risky.
And then I see there was
money, and it doesn't need
exactly.
to be. And so you're saying that appraisal fee, is that just $399 because you've negotiated across the board?
Absolutely.
Is that doesn't even matter if it's on the island? I know Linda, we have islands that we're dealing with out here.
Yeah.
Even
we
that.
actually we're a nationwide company.
Okay.
It may require a second inspection, depending on where it's located. But again, that's a case by case basis.
Okay.
Typically the appraisal is all we need. And that was a negotiated down price because we're a nationwide company and we provide them with enough volume.
Okay, wonderful. That's great to
know.
know.
Somebody asked a question about what happens to the remaining 20%. We issue the remaining 20% on the residential purchase agreement as a buyer's closing cost credit. But what actually happens to it is that your client keeps the upside. We don't take any of our fees, including the agent commission, out of that very first transaction where we give them up to the 80%. Everything is based off of the resale value of the home. So once Zoom Casa has purchased it from your client and then relisted it onto the open market, what's really nice to know about this program is that Zoom Casa is not a realtor nor a lender, so we are not your competition. We list you on the contract as your client's agent, and then you are also contractually listed to assist Zoom Casa when that home sells on the open market. So you guys don't have any cap on commission. Whatever you negotiate with your client is what gets listed in the contract, and that comes off of the resale value of the home. What we found is in today's market, the homes that are no longer inhabited, that are staged, can sell for upwards of 11.1% more than if somebody is living in the home. Mm-hmm. So we have been able to mitigate basically our program fee because they're getting more money on the back end when the home resells.
Awesome. Hopefully they answer your question, Kyle. That's a good one. You can keep going.
Well, I think that's what we look at too. And then, knowing what we have up front, the numbers that we use for when we close on this forward is what it's going to be listed for. And what we've found in this market, that oftentimes it goes for more than it's listed. And again, if it's staged. So that was the question that I had earlier for Jenny, was it's like, what if somebody has on their team someone that does their staging, does their, helps prepare property for sale? Do they have to use Zoom Casa's vendors? And the answer is no. You do you on that property. And it's not mandatory that you go through them. So that I thought that was important too.
Yes, I do just want to
So-
state, Linda is correct there. I do also just want to state, we do require that the vendors are licensed and insured. So we can utilize any vendors you have as long as they're licensed and insured.
Okay, great.
And are they paid at closing, Jenny?
The vendors,
Yes.
that's totally up to the
There's
vendors
no
to
upfront money. Okay.
Yeah, there's no upfront money that comes out for your clients, but if the vendors ask to be paid in a specific amount, or, some of our vendors like to be paid for materials up front and then the remaining balance at the end, we take care of funding all of that. And then your client reimburses us from this resale value of the home.
Okay.
And we've got a worksheet here that's coming here shortly too that kind of shows that. So we'll look through that. Forward takes place in 2 transactions. Zoom Casa acquires the property and up to 80% of the value, which pays off the mortgage and cash out equity. And then once the seller moves out, it says Zoom Casa prepares the home for sale with our expert designers and proprietary vendor platform. So that was what I was just addressing. That's an option, right? One of the things when I was talking to Jenny earlier is it's like how these buyers or sellers that will be buyers feel so served through this process. Because they've got their whole team. They've got Zoom Casa, they have their listing agent, and they've got their lender partnering with them to put a program together that fits their objectives and their needs and takes away all of that frustration or fear of how it's all going to work out. So you shared that too, Jenny, that just the feedback that you've gotten is that they have felt she's part of the team and becomes part of the resources to help them accomplish what their goal is. Let's skip, I think we've got this one covered. Let's see what this one is. Okay. Yep, we've covered this one.
Keep going, Chan.
So this is some of the things we talked about at first, right? Forward enables agents to win more listings by removing the roadblocks, which I'm afraid I'm going to be homeless and I don't want strangers in my house.
Address the commission.
Example. Let's go through the example.
Yeah, before you go to the example, Linda, okay, what about the commission? I think a lot of people are wondering that on this call, like how does that work? So we charge whatever we want on the commission, on the listing side and the buying side. Okay.
Yep.
So that
and there's no participation, no minimum requirement, no maximum requirement. That is, you negotiate your commission as you would any other time.
Okay.
So this example is the seller owns $1 million home and they owe $400,000. Their goal is to upgrade to get into $1.5 million home, and they want to put 20% down. So what are we trying to solve for? We're trying to come up with their 20% down and qualify for $1.2 million loan. Okay, let's go to the next screen.
This is a real
So
really
this shows
this is a lot of people are in this category. There's a lot of people in this category. There's the middle, between Pierce and King County, there's a lot of people sitting on not know what to do. And they're seeing like, the interest rates are going up. Now's the time to sell, but I'm still too nervous. So this program pretty much solves it. It's the only program that I know of that actually solves for this. Is that right? Still, I'm just like so shocked.
I would agree.
Yeah. Bridge loans out of the question, right? That's not something that most people want to tackle. But this lays it all out for you as far as what the current home is.
Well, and even on the buyer hacks that we did, and that's why a lender being part of this is so important too, because we did an example on this buyer hack program of a buyer wanting to upgrade and taking 100% of their proceeds and putting against this new house. Mm-hmm. And their monthly payment was increasing like $1,400 a month. Versus restructuring how we set that financing up. They ended up being able to buy that house for like $390 more than what they were currently paying in their home based on how you structure the financing. So all the pieces need to come together. You need more than an order taker, I guess.
Yes.
Right? Not just someone filling out the application and submitting it, but actually looking at a bigger picture and saying, how do we maximize and capitalize on this market? Because the next level for anyone to go to their next level in financial wealth is understanding this. I want to stay there. I want to go back up on the worksheet and go through that just a little bit, Shannon. Yes. So $1 million home, $400,000 mortgage, future home, $1.5 million. They're going to put 20% down, $300,000, and they get a mortgage of $1.2 million. So that's the future home. Forward, initially, will unlock $750,000 of that. This is 75%. So it doesn't, again, Jenny said it doesn't have to go to 80%. What is it that accomplishes their needs? So unlock 75% of the value, pay off the existing mortgage, closing costs. I don't know what, I want to cover those a little bit, Jenny, but, and so initial net proceeds, cash in their pocket, $346,250. Their down payment is $300. So they've got their closing costs and their down payment in that $346. That's cash in their hand to go be a ready buyer with 20% down. Now you can see the value of the home was $1 million. Resale price $1.1 million, which is $100,000 higher than the value. And Jenny, can you, I mean, I'm assuming that's because it's staged, because there was improvements, because, I mean, is that the assumptions that goes into that resale price?
Exactly. If you look at that second to last spot where it says reimburse pre-sale home prep for the $25,000, we have the pre-sale home prep program. We're assuming that they did, if we put $25,000 worth of work into it, and then we stage it, it's going to sell in today's market at 1.1. It's very possible it could sell it higher or lower, but the beauty of this program is that that remainder net proceeds, 97% of the remaining balance of the resale price of the home goes to the client. The remaining percentage is for our program fee, closing costs, and commissions. Now, I did see someone asked in the chat about the excise tax, and I know you and I talked about that. I feel like you're going to talk about it, but I just wanted to add that in there.
Good. Yes. We'll go into the chat and answer those questions. Does anyone have any questions on like looking at this worksheet or kind of understanding the concept? We should look in the chat, huh?
Yeah, Jenny has been looking at the chat while we've been talking, Linda. Okay, so.
Okay, good. Yeah.
I think people are wanting to know, get to the nitty gritty. So how much is what's the cost to Zoom Casa? I mean,
okay.
What does that look like?
Oh my gosh. I will, before I tell you, when I was doing this first presentation to a buyer on this, before I'm like, oh my gosh, 6% commission. So the cost is 3%. The base fee is 3%. 3% for Zoom Casa. I'm going through my mind, I'm like, oh my, who's going to do this? They were in a heartbeat. They said, this is our solution, right? So it's 3% is the base fee, and it's 0.5% per month. So if you have the money for 30 days, that's a half. You have it for 60, then it's another half. So 3 is the base fee. And what's interesting is when we do this worksheet, like the house we were talking about, they were going to list for $550,000, but they fully expect that they're going to get 580 to 620, right? But all the numbers that we're dealing with were there. They're like, we've got it made up right in that price. Even that alone covers the cost of this. So what is your initial reaction to a 3% fee for this program?
I mean, it's not bad because bridge loans were so expensive, right? I mean, you're talking that percentage was a lot higher when we were doing those back in, what was that year? I can't remember. It was like where people were like, ooh, do I do the bridge or do I not? I mean, it was such a high interest rate over that. So, I mean, when you work it out, it's probably.
Well, it's interest rate and fees. Right. So there's not really an interest rate, right? There's a fee because they're not making payments. It's not accruing interest.
Mm-hmm.
So it's not like a 12% interest rate, right?
And then they get to stay in their house too, right? So you're not uprooting the situation or the schools. I mean, that's a big deal for people when they're looking at, it's a life change when you go from this to that. And then not knowing which offer you're going to get accepted. Your real estate broker's working overtime, your buyer's agent's putting in how many offers to get it accepted, and having that stress kind of off the plate is very, very nice. That's what we've heard.
Absolutely. Well, and I think that it's picked up in so many other places. The same thing. If you sit down with a potential seller that's not financially savvy and did their net proceeds if they sell their house, when they see $200,000, $300,000, $400,000, it's mind blown for a lot of them. I mean, they've never conceived that they would have that amount of money to work with and make choices. So to take 20,000 of that for this program to get them to that next level it's not even a thought. It's interesting, right? It gives you have the resources through your wealth and equity to be able to do a program like this. And we haven't always had it.
That's awesome. I think somebody had a question. It was a good question too. I've got text messages coming in as well. Okay, so you keep going if you need to.
Okay. No, I'm good. Let's answer some questions. Let's go back here. This program can be used. Oh, look at she's answering. Once the property is sold, where does the other 20% go? So again, the seller gets cashed out when the home is sold, the second sale. The excise will come back to. Who pays the excise tax when Zoom Casa acquires the property? Let me pull up this. What is the top loan given, 3 to 4 million? I don't know that I have an answer to that, Jenny. I mean, if we got them approved, so our job is a pre-approval for their permanent financing. If they've got their 20% down on jumbo, I don't know that we don't have a limit on loan amount.
I don't believe Caliber has
Jenny?
a limit. Zoom Casa does have a property limit. Our properties, we do not work with investors. Our programs are not for investors. They're for everyday clients. So we won't work with an investor. We will work with, we've done mobile homes. We can do owner occupied, single family, multifamily, co-ops, 1 to 4 unit buildings, provided it is a landlord situation, not an investment company situation. And for our program structure for the cost, and I typed this in the chat as well, for the forward program, it's properties from $150,000 to $3 million. So $3 million is our cap.
Okay. That should be pretty good for us as far as our area coverage.
Yes. And I do
right?
see that somebody noted in here that we do not charge the client the $399 appraisal fee unless they choose to back out of the program. We take the cost and we pay the cost of that fee out of our program fee that we get from the client. So they don't ever pay that unless they don't want to go through the program.
So it's pretty easy, Jenny, for us just to pitch this and to say it's 3% for best choice, 3% for the buyer's agent. That's what you guys should be doing. And 3% for the program, right? So it's a total of 9%. Yep. So it's pretty simple at whatever price point. Is that what I'm hearing you? Is that adequate?
Exactly. And what's beautiful to know is that as you decrease that amount that is advanced to you, so let's say we have a $2 million home and that client has a $400,000 mortgage balance and they need access to $500,000, we can drop that percentage to 50 that we cash out for them in the initial transaction. And that takes their program fee all the way down to 2%. So like I said, it's entirely customizable to your client's needs because our goal is to get them out of their existing property and into their new one without paying so much out of pocket. So we customize it to be, that's why we started working with Caliber so that we can qualify these people and then we're not waiting for the mortgage qualifications. They're already pre-underwritten. And now we're realizing that by doing that, we've saved ourselves time on closing and we've also saved our clients time. And at the end of the day, you cannot put a price on time.
So is there paperwork then? So it's just putting, like, say I have one this next week that I've got to do. What would be the next steps?
Yeah, so essentially the way that this works is you want to get your client into a meeting with us so that they can get a proposal done that looks kind of like this one that's placed in front of you. I suggest for that meeting that you as the agent and your client, as well as the lender, join at least for the first meeting. What I have found is that this type of support, and I'm sure you can speak to this, is unheard of for other agencies. No one's going to be able to walk into a Remax or an Accord or a BHHS and have 3 people go to bat for them on a Zoom call. It's just not heard of. Nobody has that time right now. So the very first thing you're doing is building that relationship between you and your client. And so what's also nice about that is that you guys have that time to ask Zoom Casa questions and show your client that you have their best interest in heart. So we can go through this whole program with them. We give them a proposal of what anticipated numbers look like you see here. Then that gets sent to your client. If that looks okay, they send a contract request to us. Once they receive the contract, we utilize DocuSign so they can sign the contract immediately upon receipt. And as soon as we receive a signed contract, we order the appraisal. Right now, the appraisals are taking us between 10 and 14 days, provided there has not been a recent appraisal. I just had a client who had an appraisal done in September, and we were able to use that plus a desktop appraisal to get an appraisal back in 36 hours.
That's
So it's very fast process, but what's beautiful about it is it gives you that 180 days from the time we get that appraisal without having to feel rushed to settle into your next home. I only have 60 days to close. I've already found a buyer. I'm going to be homeless. It gives you that breathing room. You can go out, put in your offer, see how competitive you need to be, and then you don't have to worry about anything because we've already agreed to purchase the home. And ideally, what we try to do to mitigate that 0.5% that we charge is we try to coincide the closing of their old property with the closing of their new property. So when you guys have gotten your offer and it's accepted and they say, okay, we're ready to close on this in however many days. And I'm pretty sure, Linda Kay, you can correct me if I'm wrong, but Caliber, once they're fully underwritten, has an insanely fast turnaround time for getting their mortgage completed.
Yep.
So once that part
We've done a couple 2-week closes.
That's what I was going to say. I know
market.
2-week closes is in there. Yeah, it's crazy.
Yes,
and we're the exact same way.
Yeah.
We're quick cash. So we can do our quick cash closes in 10 to 14 days as well. So your client can stay in the home during that time and have time to pack all of their things and move out. And even while we're doing any type of renovations or repairs, or if they wanted to hurry up, get out, list that on the open market, they have full use to do that.
awesome. And then marketing information, Jenny, do you guys have, or does Caliber have any kind of like a flyer that can, something that can
Absolutely.
I have a 1-page simple flyer. Maybe you have more.
Jenny, you have something
Sorry,
more?
Jenny.
We have 1-page flyers as of right now. I may have some other information that I can circulate that has been branded through Caliber. I can send that to Linda Kay after this meeting. I do see that I have a question that somebody asked here about Zoom Casa. Yes, we are the owner on the new home once we have unlocked that first initial transaction. We do become the title holder, but your client and you are still in full control. You guys have already predetermined what your list price is going to be when we relist it on the open market. You guys will still be able to go through any and all offers and vet the offers. We do say that within reason, because if somebody's going to offer me $1.2 million on this example of a home and somebody doesn't like the way their hair looks, we're going to tell them that they have to take that. But if you're deciding between, maybe a young family and you want to see them grow up and their child grow up in your home that your children grew up in and somebody else, and it's only a couple $1,000 difference, we do give you and your client the freedom to make that choice still. So even though you're not the title holder, you're still in charge of choosing what type of scope of work gets done. And you're still in charge of picking the offers and going through who your next owner is going to be. And I see somebody asked about the 0.5%. I just want to reiterate how that is charged. Our 0.5% is added to our program fee base. So at the 75%, it would be the 3% plus a 0.5%. And that 0.5% is charged every 30 days from the time we take title until the time the home is listed on open market and the new owner takes title. That is that is prorated down to the day.
Prorated.
So if your client has it for 31 days, we're not going to charge them a full percent. And what we try to do by coinciding the closings is shorten that gap time as low as possible.
Okay. Super.
So one of the things that came up, so I tried to come up like, what are the gotchas? What are the what ifs? Excise tax is the big one. The other one was it's gonna trigger. Gosh, I'm losing it on FHA. The flip rule, right? It will trigger the flip rule on FHA. So I think, and I'm going to dig a little deeper, but I think if you use Zoom Forward, that you can't sell the house with FHA financing without triggering the FHA flip rule. So that's one thing that came up today. I'm like, I want to dig in a little deeper to that. So I will.
We have done it. Yes, it does trigger the flip rule. That's again part of the reason we carry that 0.5%. So I believe that the flip rule is a 2-year period, or a 1-year period. I can't remember exactly what it is, but that 0.5%, we would just wait to purchase the client's home until they have met that standard. So that's really what's beautiful about that 180 days from the appraisal. It gives them that time frame that they may need to hit that goal for FHA.
Oh, I'm not worried about our buyer. I'm talking about someone selling the house can't sell FHA for their new buyer. But I don't know that that's a big factor in our market right now either.
I'm not sure that it would be in our market right now, just because what I'm seeing is most FHAs are contingent offers anyway. So they're not the ones typically getting accepted right now, but it's different everywhere, honestly.
We'll have to watch and see.
Yeah.
I think right now we're going to be fine with that, but that's good. Linda, you've already thought through that, poking at that issue. It's great.
Yeah, I just want to make sure that we know, going in. So on the excise tax, I know Stewart Title has their workaround on it. So I work a lot with Lisa Schultz at Chicago Title, and we dug into this. And Chicago Title is actually closing these and working around the double excise tax. So I have the RCW, the WAC code here that needs to be referenced. And it is, so how did she word it here? The seller will pay excise tax on the full amount of the loan at the time of final closing when Zoom Casa sends it to the end buyer. It's where they are the nominee of the seller to act on their behalf for financial purposes. That's the exemption. Okay. So I do want to follow that through, and I want it in writing from the powers that be that they will close on that, and the sellers are protected against that double excise tax.
We have done some in our office too. We don't have any problems with Tycor, Fidelity, Chicago, and Stewart. Okay. Those are all kind of in the same umbrella.
It's like a relo?
Yes. It's kind of considered that same type of vein. So as far as I know, Linda Kay, we're covered there, but I love that you've also looked at that too with the powers that be. So it should be not double tax. You shouldn't be paying excise tax on both rounds. It should just be one.
Good. We'd like to say the same. Bet is at least 50% equity. I don't understand what. Oh, I see. You're answering Ben's question. All right. So there's no restriction to how long they have to own the home before they can sell it. I mean, they could have bought a home and put 70% down and have a ton of equity in their house if they bought it 6 months ago and still do that, right? Jenny, there's no restriction. You don't have to own it for any specific amount of time.
No.
Correct. Not for Zoom Casa. No restrictions on our behalf.
Good.
And the other question I had that came through my text, I think it's the last one, was isn't this like Fly Homes? It's kind of similar to what they're offering in-house.
Very much so, except for 2 very big things about Fly Homes. Number one, about Fly Homes, they have their own agents. So they cut you guys out of the deal. That's the number one most important part. They list it themselves. The number 2 part is they're not a guarantee that they're going to purchase their house. They are stating that they could purchase their house, and then on the back end, if they cannot, then they will be required to get mortgaging on their own. We're giving them a firm residential purchase agreement, and we're also giving them the full amount of their appraisal. Fly Homes will give them a discounted amount, will purchase their home for a discounted amount, and then relist it on the open market with their own agents, and they'll keep the upside. Your client is going to keep the upside of whatever repairs we do to the home or whatever extra money the home sells for in today's market.
Okay. Thank you for clarifying, Jenny. That was great.
Yeah, of course.
Yep, that was good.
Okay.